Hey everybody, Brian here from quantlabs.net. Today I want to talk to you about this new report I just put up. I manually posted it to my quantitative or quant analytics members. Now, what I'm referring to here is this. If you come under my products page, anywhere on my site, just come under quantitative, full quant analytics, full service, view the course, which is really a monthly subscription here. That's why we put that in there. So it is charged monthly. So let's talk about what we got here. Okay, so in this report, this is the first systematically generated report from my system. I've got like I don't want to say hundreds and hundreds of scripts, but I do literally have that. And I'm intending to roll those out as part of the quantitative service. But the problem is I don't want to overwhelm people. So what I've decided to do is put them into like a simple report, but there's a lot of data in it. Now, let me just show you what we're talking about here. So if you come under the analytics, you're interested in joining, just get started now and join. But like I said, this is the very first one. So this is under my membership area. So let me just get rid of that. Okay, so if you download this systematically generated report, what it will do is it will, oops, probably better if I do it this way. I'm going to do a shortcut here. Okay, so we're going to go to here. Now, this is a protected page, just so you know that. So you need to access it through my membership here. Okay, so as I said, actually that's the most recent one. Okay, let me just go to the next one. Okay, we got two here, so we want this one. Yes, okay. So this is the one we just had. Now, if you download this, it is, you can see a document, so probably have to do it this way. Click right, save, link as. I'm in Chrome, so I'm going to download it to my download section and open her up. Now hopefully it'll automatically load up in my case I'm using, in this case it's going to load my Apple Pages. So this is the report that we're looking at. Okay, so you can see here we got a chart and some data. Now, before I talk about this, this is the Federal Reserve snapshot, and each report is either from the Fed, St. Louis Fed, or another source. Could be Quandl, it could be somewhere else. But generally what we're looking for is forward-looking data which will give us a snapshot on what the Federal Reserve will use for forward-looking data to gauge how the economy is doing and obviously to gauge if they're going to raise interest rates or not. So what I've got here is we've got forward-looking data on various sectors in the economy of the U.S. So for instance, we have industrial production mining, we've got gross domestic product, industrial production, consumer sentiment, and so on and so forth. So I'll go through these each one and try to explain what's happening. Okay, so as I said, we have the periods that are in each report. Now, this one's monthly, and there's other ones that are every 31 days, and other ones maybe every 7 days, and another one's every quarter, as this one is for the GDP. Okay, so that's like obviously every 3 months or so. Okay, so what does the data represent? So the Federal Reserve may, depending upon the data source, may track data all the way back. In this case, industrial production mining may actually track it all the way back to the 20s. Some of it may be is from the 90s and even the 2000s. So what we're trying to identify here is a trend of what's happening in the U.S. markets and the U.S. economy to figure out what's going to happen for a number of things that we're looking for forecasting in the U.S. markets. In this case, we're looking at mining, probably coal is a big one. And what we can see here as an example periods, days, every 30 days. So we have here an analysis done on the trend over the last, let's say, 1 month, 3 month, 6 month, and 12 month. So what these numbers represent are basically the percentage in each change between that period of 30 days. And then the 3 month is the average over the last prior 30 days. So the last 3 months worth of data. So this is the average. And then again, the 6 months and the 12 months. So what we're looking for is the general trend. But the thing here is that we're really looking for is momentum of how things are looking. So if it's every 30 days, what we do is we try to gauge over 3 months the number of positive trends or negative trends. So what I'm saying here is that we have two negative percentage changes, which means it's been negative, or positive over the last 3 months. So these are what these numbers mean. So the significance is in these numbers, and this is momentum because it will tell you if it's a positive momentum or a negative momentum or a choppy momentum. And again, this is forecasted out for the next, in this case, 30 days. Okay, so let's take a look at the GDP, gross domestic. So as I said, this is every quarter. So we have here the percentage of moves, okay, over maybe 4 quarters, as well as the momentum. So you can see here over the last year, 4 quarters, we've had positive momentum and not negative, which means obviously the GDP for the US economy has been positive. So here is another important one, the industrial production index. Some of this may not include aircraft, which is a big sector of the US manufacturing in the US economy. So again, same trends every 30 days. So last month we had a negative trend of 0.0043, 3 month average, 3 month, 12-month average. And again, we've got those number of positives versus negatives. So you could see here in the chart, it's sort of choppy. It's pretty hard to gauge that, but that's where you start using other indicators to better gauge on that direction of, let's say, production index. So the other benefit of this type of chart is it tells you if you have positive momentum in production, that US manufacturing is doing well, which means the US stocks are related around manufacturing are doing well for that time period. So that's an identification of maybe you should deploy some capital in those stocks or sectors, maybe ETFs or mutual funds if you're interested in those positive directions. Now, also, the other big one is consumer sentiment from the University of Michigan. Now, this one is important because it gives you an indicator of how the U.S. Consumer feels about their future. And again, this is forward looking. Forward looking is very important. And this is done every 30 days. So you can see the general trend here is up since 2006. We had a dip, but it's been trending up. And again, this is really important because you can see here we've had positive momentum for the last month, but we've had over the last 3 months negative, 6 months positive, and again 12 months. So what does this mean? It's choppy. But again, over the last 3 months, it's been positive. So this right here is a 3 month average. So somewhere in there is a negative return of something, but at the end of the day, it's still positive for 3 months, which is a good indicator again of how the U.S. consumer feels about their future. Now, this is another big one. New private housing units authorized by municipalities for building permits. Again, last month, negative. 3 month negative, 6 month negative, 12-month negative. So you can see here there was 1 month positive, but 2 months negative. So that tells you that in the housing market, things are either slowing down or even contracting. Okay, so again, comes back to manufacturing of durable goods. So again, we can see here, and the key here, as I said before, because we're tracking this since, let's say in this case, the 60s, we can see the true business cycles that people speak of how consumers feel, how manufacturing is doing, or housing starts, or whatever. But when you try to time it, it's impossible to do it because A, it's impossible to perfectly gauge that upswing. And at the same time, we cannot gauge the momentum or the magnitude of the upswing because it's each since the 60s it's been very different. So there's going to be a number of factors that's going to drive this magnitude of that upswing, and you need to be really cognizant of that. You can see here we just came out of a very bad downswing, but we're on our way up, but we're now dipping down. So we need to have a really granular level of analysis to be able to do this. But using these kind of charts and stats, it really helps to give you a high level overview of how the US economy is doing based upon this data. So it gives you a lot more confidence because you're using raw data from the Fed or Quandl or wherever you get the data from. It will give you more confidence on the trends within these sectors. Again, let's continue. Manufacturing, new order, durable goods. It's been choppy over the last 2 years. Again, this is new orders. Now, if you were to ask me, with this type of choppiness, would you want to be having your capital tied up in this? Probably not. You want to be in sectors that have continual upswing. This is your capital being deployed, giving you virtually no return. So here we've got 1 month negative, 3 month, but look at the swings. It's not very significant. 6 month trend negative, 12-month trend very, very low. So again, if you're going to be tied up in these kind of sectors, it's not a good thing. But again, we are getting some positive months, negative months. But again, it's really choppy. And this is, again, every 30 days. New orders, non-defense. Because typically in manufacturing, when the U.S. economy gets hit, defense or military manufacturing goes up. It's just a way of how the U.S. government works. But because of the debt that the U.S. government's taking on in 20 trillion plus, I don't know if these trends will continue. And it's pretty evident here because you have an ups and a down, up, and then it's flatlining, and then it's down. Coming back, but it's probably going to start trending down. Okay, so again, this is non-defense. So this is outside of military manufacturing, which is a big portion of the U.S. economy. So it's a little bit of an upswing, and you can see it's upswing, not a bad deal. But the magnitude of those changes are fairly low compared to other sectors. So again, payroll has gone up, not a lot, but it's going up, and it's been like that since 2010, let's say. Civil unemployment rate, you can see it's coming down, not quite historical, but again, we can see what's going on in the economy. Industrial product manufacturing, again, it's been sort of trending upswing, but again, negative returns. You can see that here, which has been very menial, and then even the last month it's been negative. Important things to know. And again, because the reporting's done for you, I'll probably run this every 2 weeks so you can get a better synopsis of this, and this will save you a ton of time in generating. Industrial, durable, consumer goods. Now, this is again what's going to affect the consumer. It's been an upswing, but again, last month it's been down, and you won't see this generally in news, but there's been 2 negative months versus 1. So again, it may indicate that there is some negative going on, as you can see here in this 3-month average. Okay, industrial production, business equipment. This is for obviously commercial product. Again, you can see the choppiness here. 1 month negative, 3-month positive, but again, 2 months negative. So you can clearly see that the economy is starting to turn in the U.S. Production material, same idea. 1 month, it's been positive, but not very strong. Again, not very strong, but it has been positive. So that's not bad. But again, because you know that this has been positive, it's safe to say, out of all the things that we've seen so far, this may have some form of strength and resilience and growth. So this, if you were to look into sectors to deploy capital, this may be a decent one to do. Claims uninsured, okay, it's trending down, which is what we want. it's been positive, but we want the opposite to happen where it's negative. So generally, these data points are fairly important. I'll probably add to these later on, but you can see this will give you a much better idea of how the U.S. economy is doing, and it's instantly done, and you can just download it as I showed here. All right, hopefully I'll help you out. Talk to you later.